It's a pleasure to be on Merge again. My name is Regina Pedroso. I'm the Executive Director from NABE Token, the Brazilian Association of Crypto Assets Companies. And for a start, I'd like to introduce my fellows. Let's start by Leandro, nearby. Can you introduce
Sure.
you and your company, please?
Sure, I'm one of the founders of Avinia. Avinia is today the issuer of the main stablecoin for BRL. We have transacted over 1 billion reais last month, and we have like 90% market share in unique transfers among all BRL stablecoins. And on top of BRLA, we basically created a cross-border payments infrastructure for global companies to connect into the Brazilian rails and be able to grow in Brazil.
Whoa. There we go. Damon Burke. So I lead digital assets for the Americas for a company called Nuve. We're a payment processor, but like many others, we've gone heavy into digital assets. Happy to provide more context as the conversation gets deeper.
Yes, and I'm Ana Paula. I'm from Nomos, a wealth company, and I'm responsible for cross-border payments. So I work for 26 years, working with the traditional way from cross-border payments, and now we are starting working with stable coins.
Hi, everyone. My name is Monica Ramirez. I'm a managing director at Anchorage Digital. Anchorage Digital is home to the first and only OCC chartered crypto bank. Our core products include custody, staking, settlement, and now we have a new team on stablecoins. And within the stablecoins team, we're focusing on infrastructure for issuers, stablecoin issuance as a service, especially on with the results of the Genius bill being signed in the US, and then also stablement, what we like to call when we settle stablecoins among different banking institutions. Happy to be here and collaborate more.
Yeah. And the word stablecoins is very special, and I'd like to ask for the start, why stablecoins are so special?
Cool. I can start. My vision about stablecoins is more around the following parallel. Basically, if you look into Brazil, you have several types of accounts. You have checking accounts, savings account, investment accounts, non-resident accounts, broker-dealer accounts, and the list goes on. But in stablecoins, it's all like wallets. The same goes for payment methods. You have TED, Boleto, Pix, but Pix, there is Pix copy and paste, Pix key, Pix QR code, and also the list goes on.
No, keep going.
But there are several. Yeah. But basically in wallets, in stablecoins, it's all like transfers. So if you think that complexity in a multi-country level, it's even harder to build using the legacy methods, but in stablecoins it's very standardized. So you basically can create an infrastructure in which you drop down from BRL to Rs to USD to Euros, and you have the same developer experience. So with stablecoins, creating financial products will be much, much, much easier down the road, and this will create the possibility of every company to be global since day one and deep dive in the corridors or the countries that they feel most adoption, instead of, okay, I need to start from my country and then you're getting other countries as we go. Yes, so this is why I think it's so special.
Sure. When you think about Latin countries working with the traditional way, we cannot send money for these countries. So when you think stable coins, we can have the solution, and it's just to complete what Leandro said. It's easier, it's quickly, and it's cheaper. So we have the solution and preserve value just to individual and to business company.
And for me, when we talk about stable coins and we only reference it as a payment rail, I think it really misses the value and the point of stable coins. Since value and ownership travel together in a tokenized asset, including stablecoins, it's very important how these are structured. So we're very fortunate at Anchorage where we can provide the full stack when you issue a stablecoin. So questions that you need to ask when you purchase, own, or are looking into issuing your own stablecoin, the key components are custody. So what type of custody will you have to house this stablecoin and use it? The second is distribution. Do you have enough distribution and liquidity so the stablecoin can be accepted and a good use of transfer for what it's supposed to do for cross-border? And then also having the ability to convert to fiat and having all those capabilities, it's super important to understand what is the full stack of the stablecoin rather than just considering it as a means to an end. It's very important to see the whole picture.
You know, Damon, different
Go ahead.
questions. Do you think stable coins can reduce inequality and increase the inclusion, financial inclusion? What, for your opinion, what's the impact of the stable coins in social?
Massive. So obviously, like for us, we're coming at it from a payments angle. But to Monica's point, there are millions of people that the first thing they do when they receive Venezuelan bolivares, Argentine pesos, and in many markets in Latin America that don't have as known as volatile currency, the first thing to do is buy U.S.-backed stablecoins, right? Simply to hold value. Then, when you want to spend those funds, you want a credential, right? You don't. Not everybody is accepting crypto. Most merchants are not accepting crypto right now, but you want to be able to facilitate that spend. And third, with the Anchorage USDG, you can also earn yield while you're holding that coin. So listen, before this, I was at Binance, and there are millions of people that use Binance as their primary banking institution. Just simply to hold value, they're either underbanked or unbanked completely, and they hold their value in crypto, in stablecoins, and then they want to move those funds either for remittances or payments or to pay employees or to pay suppliers. So essentially, as Leandro was saying, keeping everything on chain, whether it's a US-backed stablecoin, but converting that on chain to a real-backed stablecoin is significantly faster, cheaper, more secure, more efficient, etc. And so, to answer your question, I think it raises all boats, not just those that have access to banking institutions and have collateral, but everybody has financial inclusion, and I think that's a big part of the end goal of introducing stables to at least to the region.
And when the monies go on chain, the central bank shows a lot of concern about it. This is a complex situation in a financial market. How can, I'd like to hear what the opinion about it, because in the future it probably will happen in a few years, the money moves to on-chain. How you think will be the impact in traditional financial?
Well, I think I'm sorry, I don't mean.
No, it's open for all.
Yeah, I mean, I think to your point, I think Visa and MasterCard, the card networks are becoming relevant,
Yeah.
right? They're doing on and off ramping, so they're benefiting. You have local stablecoins
Yes.
that are only benefiting the central bank, right? It's pushing up the real,
Yes.
and clearly the U.S.-backed stablecoins, which is 95+% of the world's stablecoins, is great for the U.S. Treasury, right?
Yeah.
So, and central bank. So listen, it's the way the world is going.
Yes.
So you can either swim
Inevitable.
upstream or jump on the boat. And I think, many of us here realize that, and you're starting to see mass adoption and the benefits from that, right? It should not, the fees that you want to pay are not in moving money cross border, and through, like I always say this, like, you would never build payments the way it exists, traditional payments the way it exists today, if you were building it from scratch. It makes
Yeah.
no sense.
Yeah.
It's overly expensive. It's slow, etc. So right now we're kind of working with a 1.0 world and a 2.0 world.
It
And
is.
I think as we progress, things are going to move. Everything is going to be on chain, and I do think it can be It can be beneficial for
Everything.
not just Web3 companies, but the traditional finance as well.
Nice.
And
Monica?
in the U.S., regulation has been very helpful with
Closer.
Yes.
In the U.S., regulation has been very helpful with the signing of the Genius Bill on July 18th. And really what that allows us to do is to issue stablecoins that are backed by secured assets. So the Genius Bill spells out what type of assets, including cash, short-term securities, very, very specific on what a payment instrument stablecoin should really look like. And I think that that has allowed the industry to really put their best foot forward to issue stablecoins that could not only be used on the institutional level, but then eventually to the retail. Anchorage itself, we are regulated by the OCC, and that will be one of the primary regulators for the Genius compliant stablecoins. Among the two partnerships that we've already announced, one is Athena. So they are onshoring USDTB, so it will be a Genius compliant stablecoin. And the other partnership is with Tether to issue USAT out of the US. So really what this is telling us is two large players in the industry are recognizing that regulation is super helpful to really grow and take it to the next level in the US. And that's something that we're willing to partner with additional companies and enterprises to really see stablecoins grow in a very regulated and very efficient way.
We have the dominance around the world for USDT and USDC. And I'd like to ask you, Leandro, what is so important is local stablecoins. Which is the main role for the local stablecoins?
Sure. So when you think of the world of stablecoins, you have basically the dollar, which has instant product market fit because everyone wants to hold dollars, which is not the same for local currencies. Local currencies are driven by business use cases. So for instance, in Brazil, if an offshore company wants to hold BRL balances, the way to do that in the traditional finance world is basically they have to get a local registry, they have to open a non-resident account with a legacy FX bank, and it's super hard, super bureaucratic, can take months, several emails exchanges with the bank. But if you are holding a token, it's just holding a token. It's so simple as any other kind of similar product. So with that, what we are seeing is that companies that has like accounts payable in Brazil, or they have demand from users that are acquiring users in Brazil, or they have to buy some asset, some company, some license, some anything. Basically, they can use the BRLA way because it's totally interchangeable with PIX. It's one-to-one, totally transparent with a third-party audit firm attesting reserves. And it's way more efficient for them to do that in the tokenized world. So basically, the way we see the world going is that obviously there is the macroeconomic thing, like the economies won't just like dollarize their economies just because the USDT and USDC are dominating the market. It's mainly they trying to protect their own economies. And if the world is heading to a place in which stablecoins are this foundation layer for every type of financial service, the second order effect is that you need local stablecoins doing lots of what today happens inside the correspondent banking network and SWIFT going on chain. So our idea is to have those assets being done in a compliant way, transparent way, very efficient and technology first approach for global companies to create this way to operate in Brazil seamlessly.
No, indeed, Leandro. Inside the association, it's clear for us observing the market that we have the payments that obviously involve stablecoins, but for the other side, the tokenization market needs this kind of infrastructure. So what Leandro was explaining is very important. It probably will be the next step, the next call to action from the companies to prepare the payments with local stable coins.
On the RWA specifically, like
Yes.
we focus a lot on the money movement side of things just because it's our main business model today, but we envision that RWAs are going to be a thing very relevant down the road.
Yes.
And basically what you're doing is you're getting money from people that has money disbursed, money to disposable to invest, and you getting that into a tokenized asset. So the bridge from this fiat world to the tokenized asset is stablecoins. So if you're doing issuing an asset in BRL in Brazil, which collateral from Brazilian assets or anything, the best way to do that is use the same currency stablecoin in order to do so. So it's also something that we power lots of companies to help, like this on-ramp directly to tokenized assets. But since it's still an emerging market that is getting relevance and traction, it's something that we just don't focus that much.
And something that we are working now is regulation.
Yeah.
We must try to draft better regulations to open the market for scalability. For your opinion, Monica, for a start, which is the main challenge in the US or in your market? What's your opinion about the regulation scenario?
So the best starting point is really starting with the Genius bill that was signed in July. There's 18 months since the signature to do rulemaking, and all the relevant agencies are going through that process right now. That could take 18 months or it could be a little bit shorter, but we're starting to see a lot of activity because there is a dire interest and need in issuing stablecoins out of the US. And the sooner that the regulations get solidified, then more actors can issue safely, correctly under the framework. And then there's eventually discussions on the Clarity Bill, which is a more market infrastructure bill in the United States that also has to permeate through Congress. So we can honestly say in the last 10 months there's been a lot of great regulatory activity. So we hope that the momentum continues and that we really use this time to really solidify the benefits of issuing safely and really getting the market ready for what is next with an asset-rich paradigm where many of us interact atomically with assets on a regular basis.
Ana, you are come from the traditional market. How the traditional market is addressing the digital transformation for stablecoins?
Yes, today we are working with educational, especially in the bridge. I think that we are in the bridge with the traditional way and the virtual way. But we are accepting very, very good because that's the way, the future. That's cheaper, that's faster,
Yes.
and that's the solution. As I told, talking about Latin, we cannot send money for Argentina, for example, but with stablecoin we can do this. For Peru, for example, too. We cannot work for SWIFT, that's the traditional way, but with stablecoin we can do. And we can do fast, we can do cheaper, and so that's the solution that we have.
Okay, what about Damon? What about risks? Many people is asking
What
all the
about
time.
risks?
What about risks?
There are none.
Can you share about it? There's no risk?
Finish your question.
Yes, let's do it. Such a volatility. Volatility is always
Volatility?
yes.
Okay.
Volatility. Sorry.
That's okay. That's okay.
It's always a question in a table. How can you address this kind of
Volatility
yes in stable coins? Not in stable coins, in the market, volatility, regulatory uncertainty, or dependence on foreign backed assets.
well, listen. I mean,
Not
I would say a couple things, right? It's in the definition of the a stable coin ideally is stable, right?
exactly, but
But I think what's very interesting that's happening is that you have local stable coins, which you have a stable coins in Argentina, right?
Yes.
That's not very stable.
Yeah.
But you get the same benefits that Leandro is talking about money movement internally and off ramping from bridges or from USD backed stablecoins or Euro backed stablecoins into local fiat via a Argentine peso backed stablecoin, right? So I don't. I mean, I think the risks are higher around regulation than in exactly what's happened. But ideally, what happens? I mean, this is happening in Brazil. Leandro's very close to it. You're, I'm sure,
Yes.
very close to it. Brazil is very close to passing its own essentially Genius Act, and I think what's going to happen is you'll have the best practices of Mika and Genius will be adopted and to create their own regulation in the principal markets, at least in Brazil, Mexico, Colombia, Argentina, in the region. And ideally, the rest of the markets will follow suit. It's very different than Europe, where you have regulation passes in The Hague, and other 42 countries just have to adopt, right? So it's dynamic and makes it maybe more challenging, but there's also high opportunity, and so I think the risks are that regulation doesn't keep pace with the market,
yes.
right? That that when we go back into a bear market, that there is less attention in I think right now we're building an infrastructure layer. We're building crypto as and really none of what we're talking about here has to do with whether the market goes up or goes down.
Yeah.
But you inevitably you start to lose attention and prioritization when we go back into bear market. And so that's another risk.
Lack of interoperability is an issue for you. Lack for interoperability between the networks.
Interoperability.
Yes.
Yeah.
interoperability.
Yeah. Right. That's another. Is that is moving same coin, different coin on multiple blockchains, right? Having a central depository and then being able to reissue or translate that value onto another blockchain, that is like a hurdle that the industry is obviously trying to overcome. But I think we're getting there.
Okay. We are getting close to the end of the panel. Next steps and your vision for the next steps into the market. Starting from Monica and
Sure. For me, next steps is Anchorage becoming one of the largest issuers of stablecoins, specifically for Genius compliant stablecoins, and that's where it will get really interesting in terms of having internal liquidity and have the ability to really promote what a good, solid stablecoin should look like. So stay tuned and looking forward to seeing everybody here in Brazil.
Yes, I think that the governmental provide a clear regulation, but to be open to innovation and not from distance, but understanding how the people are already using the stablecoin, and create regulations, including to protect the users too.
I would say two things. One, tokenized assets, right? Similar to what Leandro was saying, the ability to earn yield on funds that are in float during the payment flow, whether they're in a holding in custody, that is going to be a game changer, right? So the ability to earn yield on tokenized assets. And two is moving TradFi on chain, right? Right now we've got a very small percentage of the TradFi world that's even investing in crypto, let alone using those rails. But it's happening, and there's multiple companies, and we want to be a part of that. And so I think those are the two biggest trends and maybe biggest opportunities.
Perfect.
Yeah.
Yeah.
Leandro?
Yeah, basically, I see like we could grow to be bigger than Visa plus MasterCard and stablecoins without the regulatory clarity. So although it's a risk, we see that more of a tailwind, because if we could grow it without it, and with now that get Genius Act, NICA compliant, VASP in Brazil, VASP in Argentina, all those regulations coming, probably the growth rate will actually accelerate. So for us, it's mainly becoming this infrastructure layer that applications can build upon, and be like every global company uses Latin America as their core expansion region, and having one provider that is reliable, that can support tens of thousands of transactions every day, and that has like all the stamp of approval of regulators, of law firms, of everything. It's the way to go for us.
And for me, to close this panel, very important is cybersecurity, compliance, and network monitoring. These three pillars of this what is support that will happen safely.
Yeah.
So, thanks a lot for this quick talk, but it's a pleasure to be here.
Thank you, Regina.
Thank you.
Thank you, guys.
Yeah.